Interest expense is nearing $1 trillion a year. That is now greater than the biggest part of the US budget, which was the military expenditures. And the problem is this, folks, is that I've been arguing that while we have an economy that right now is still growing a little bit, GDP is still growing a little bit, I've been saying that there's dark clouds on the horizon. Eventually, we're going to see Bitcoin and Ethereum rocket. So the idea is that nothing's written in stone. It doesn't mean it's a guarantee, but what it does mean is that in general, bigger moves or significant periods tend to occur on a 7-point.
Amid today's economic concerns, Gareth Soloway emphasizes now, more than ever, to keep an eye on cryptocurrencies like Bitcoin and Ethereum. Despite their current bearish trends, Soloway believes that with the possibility of central banks resuming money printing and the ongoing financial uncertainty, digital assets will surge very soon. Bitcoin is currently sitting just above $29,000, while Ethereum is still hovering above $1,800. Soloway cautions against blindly trusting short-term cycles in the crypto market, as they may not be as reliable as some new investors might believe. Instead, he urges a long-term perspective, recognizing the cryptocurrency's ability to thrive in the face of economic challenges and financial instability. Gareth points out that while traditional investments face challenges due to rising interest rates and inflation, cryptocurrencies offer an alternative avenue to protect and grow wealth. Let's get right into the latest interview with Gareth Soloway as he gives his prediction for Bitcoin and where the crypto market is headed in 2023. Don't forget to share your thoughts and comments down below, and leave a like if you enjoy the content we do here.
This is, as it says, the US government annual interest expense. Look at what has gone on here. Interest expense is nearing $1 trillion a year. That is now greater than the biggest part of the US budget, which was the military expenditures, which, by the way, is like more money than the other 5 top countries combined. That includes China and India and lots of other big names out there. So not only is the US spending a ton of money on military, which you could argue is a good thing, but also look at what's going on here, the interest expense. Now, I look at interest, when I'm paying interest on something, it's money that's going in the toilet. It is money that's getting thrown away because, again, it's just getting paid out because you spent too much damn money and now you have to say, okay, well, we have to pay that back or we have to pay the interest on that. And the problem is this, folks, is that I've been arguing that while we have an economy that right now is still growing a little bit, GDP is still growing a little bit, I've been saying that there's dark clouds on the horizon. And when you take this much money and you flush it down the toilet, when this money could be going to growing the economy, when it could be going to, let's say, healthcare or Social Security or other things, that to me is horrendous. And every American, every person out there, and by the way, it's not just America. Go to any other country out there and you're gonna see a lot of this same stuff. That is a problem. All right, next on to the macro front, guys. I gotta show you this here. This is average monthly payments for new cars. Now, again, for those of you that may be in your 40s or 30s, when you first got a car, I remember I had a little Honda, I think it was a Honda Civic. I think I paid $200-300 a month for that lease. Look at what's happened, guys. Look at the average monthly cost. And the reason I'm bringing this to your attention, I'm showing you costs that are advancing, costs that are blowing up. And because ultimately this sucks more and more money out of the individual, the consumer, that is going to be harder and harder to kind of keep the economy trudging along, especially when you have interest rates going nuts. So again, you're now talking about the average American, the average person is now getting close to $750 per month on a car payment. Now, this is a pretty crazy one, folks. We talk about how the economy is offsides. The chart showing net speculative positions in treasuries has collapsed. Now, what's amazing about this is that we have net speculation in treasuries, meaning that people are more interested in being in stocks than pretty much any time else in history. Now, think about what that means. You have US bonds paying more money than they have. Interest rates are as high as they have been in 22 years, meaning that even when interest rates were, 25, 50 basis points, people were more interested in being in bonds than they are now, meaning that people are more interested in investing in stocks right now, even with the bond market paying what it is. That is a huge lopsided issue, folks. And again, think about this. Think about it logically. Like, does it make sense that when you can get 5%, let's say on a treasury, that you would be still more interested than you were when you could make 0.25% on a treasury or half a point on a treasury? You would still be more interested in investing in stocks? That is a way offside scenario. Right now, we know GDP last week came in higher than expected. And this is what most people don't know. When real imports, when imports drop, so meaning that when you as a group are importing less, so the American public is importing less from China, from all the other countries, GDP actually naturally will go up because imports are subtracted from what's going on in the US. So, for instance, when you have GDP at 5% GDP, or it would be 5% GDP, but you're importing 2%, then your actual GDP is 3%. You're subtracting what you're importing. Now, the problem with your GDP numbers is that we have now seen a decline, a massive decline in imports in the US, which is artificially buoying the GDP number to the upside. So again, everyone's so amazed, like, oh my goodness, 2.4% GDP. Well, yeah, but why are we're seeing imports decline precipitously? Now, you might say, oh, this is great. Maybe the US manufacturing side is doing so much better. This is the kicker. Is it that, or is the economy weakening, and are we importing less because the consumer is weakening? And even if the consumer is weakening, which by the way shows you that a recession is probably 3, 6, 9 months away, even that, a consumer weakening in the short term artificially lifts GDP. So these are things, again, folks, that even I didn't know a few years ago. But as we get into this data and you dive in and you do a deep dive, you start to recognize more and more. I showed you guys this last week when it was early on in the bear flag. This now is a mature bear flag. In addition, you have a time count. Time counts are powerful signals. They're timing factors that repeat over and over. The time count that I use is the 7 factor. And you could go through any religious text. You can go through almost anything, 7 days in a week, the 7 deadly sins. You could go, there's things that in human nature repeat over and over again. And they repeat in charts over and over again. So you could look here, right? Pivot low, 1, 2, 3, 4, 5, 6, 7. So the idea is that nothing's written in stone. It doesn't mean it's a guarantee. But what it does mean is that in general, bigger moves or significant periods tend to occur on a 7 point. This is bearish. The idea is you likely are going to have a down move. I think your max downside right now remains at 27,000-ish, give or take. It's an upsloping trend line. Nothing really has changed from last week on that chart. Ethereum here, folks. Bearish consolidation. You've been in a general downtrend. This is your down target, 1750. I would continue to expect 1750. And by the way, doesn't mean we can't go higher. And like I said, with the Fed going back eventually to printing of money with what we see in Japan, eventually we're going to see Bitcoin and Ethereum rocket.
Soloway says that rising interest rates as well as inflation are serious economic concerns that demand attention. As the US government grapples with its growing debt burden, this is causing major concern with investors as they navigate the changing financial landscape. In such uncertain times, cryptocurrencies like Bitcoin and Ethereum present opportunities for those seeking to safeguard their assets and capitalize on market growth. Soloway notes that the current market sentiment reflects a lack of interest from retail investors, leading to an increase in Bitcoin adoption. He argues that if new participants are not entering the crypto space, the focus will remain on established assets like Bitcoin and Ethereum, highlighting the entry of institutional money into the market. Soloway also believes a pivot by the Fed is coming soon, which is a clear indicator to prepare for the crypto and stock markets to rally. Soloway also acknowledges positive regulatory developments, but expresses concerns about the impact of de-risking in the stock market and how that will have a negative impact on cryptocurrency. While the regulatory landscape and rules for altcoins are still unclear, the positive impact for Bitcoin far outweighs the uncertainties in the broader crypto market. What do you think about the latest interview with Gareth Soloway? And what will be the next big move for Bitcoin and Ethereum in the coming weeks? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.